Take the discussion forward with Aman Chowhan, who's joining us from Abakkus Asset Management. Aman, morning. Thanks for your time. What is your overall observation on the market setup right now? Are you comfortable deploying fresh money in ideas, or are you just keeping your research ready, names on the list, but would like to look for better entry points because of the sharp run-up we've seen in the last 2-3 months alone?
Sure. It's a combination, I can say that. While the inflow that we're getting, we are partly deploying that right now, and we would be like 60-70% deployed for any new client that comes in. And the balance, we are hoping to deploy over the next 3 to 4 months, just to ensure that we are comfortable in the stock that we get into. So we follow that bottom-up approach. So for us, market levels don't matter, individual stock price do matter. So that's the way we are approaching markets right now.
What I meant to ask was not levels of the market, but when you see 70-80% of any index only for reference sake, higher by 40-50%, in the last 6 months alone, entry points do matter, don't they?
They definitely do. That's the reason we are not fully deploying the cash that we get in. So it's gradually being deployed over the next 3 to 4 months at least. So uh, while we are not worried about the market valuation, which we feel are still reasonable, it's not cheap definitely, but it's slightly premium over a 10-year average. So we are okay with that. But within that, there are segments where the valuations are way north of what they historically done or the way fundamentals justify. At the same time, there will be some pockets where there's still decent valuations, and that's where the focus is. So that's where the divide is. It's not about market, it's like where we can still find value. It's much less than what it was, say, 2 years back or 1 year back, but there's still something or the other that we keep on getting into.
Aman, hi, morning. So curious to know, where is it that you're actually scouting for value, and where is it that you find valuation comfort and growth visibility both?
So financials, I believe the consensus call, everybody is calling on that. Besides that, chemicals is something where we see things are turning around. And in the last few months, we have added more exposure to pharma. We have kept more into EPC companies, infra companies. So these are some of the segments that we have got more bullish over the last few months. IT is still neutral for us, and consumers because of valuation is still neutral. This segment that has done very well for the last 12 months, which is PSUs, defense, railways, that is now looking a bit too expensive. So north of 50-60p is something that now incrementally I feel that very less of at least our portfolio money would go into these segments.
So there's one part of financial, since you've spoken about it, which I want to talk a little more about, and that is asset management. There are three of them now. You have one of them, the largest one in your portfolio. How are you analyzing this opportunity for asset managers? They are shielded by regulatory, changes, which we just saw yesterday, according to many. But do they have a nice structural opportunity, 3 to 5 year, 25-30% growth kind?
Not 25-30, but 15 to 20% is what we feel, and that's broadly what we are expecting from these stocks. It's going to be a combination of both market moves as well as the new money that comes in. So we have seen the kind of SIP flows that we have seen. We have seen the kind of interest the retail and the HNS segment in India is having towards the equity markets, and we don't see that changing. There could be some quarters where markets might go for a time correction, or there could be some months where there could be some outflows also. But overall, as a direction, more and more Indians are getting into financial assets. They're getting into equities via the mutual fund route, and these are the natural beneficiaries of that. We don't see any large new player coming in and disrupting the top 3-4 players in this industry in a meaningful way, and that's the reason we are pretty comfortable with the 3 to 4 year outlook for these segments.
Okay. Give us a sense then, Aman, as well, as to what the projections are when it comes to the earnings trajectory. Are there going to be any specific sectors or spaces where we will see an outperformance or any major disappointments anticipated?
Our research team has been telling us that cement this quarter is not going to be great. Even the consumer discretionary sector is not going to be great this quarter because of the elections. While earlier we felt because of elections there could be demand pickup, but it looks like that doesn't happen. Retail segment, textile segment is also going to be soft this quarter, is what our understanding is. IT is going to be neutral. What the companies have guided, I believe they'll be able to achieve the guidance. Pharma could surprise on the positive. Pharma and chemical, as I mentioned, these are the two segments where we are seeing incrementally positive upgrades coming in.
Chemicals a little more. What have you started getting into in chemicals? There is a variety which is complex chemicals and export to some of the most regulated markets, Japan, etc. Then there are the commodity type of chemicals, agrochemicals which are mostly catering to India, and few specialty chemical or maybe EV or something. Which category do you like most right now on valuation terms?
It's agrochemicals as well as bulk chemicals. So what has happened in the bulk chemicals is because of the container constraint and the higher freight rates, the imports have been constrained, and hence the domestic manufacturers are seeing better pricing power. And globally also things seems to have bottom out on the pricing front. So that's the narrative for the bulk chemicals. And agrochemicals, as we all expect, this year monsoon should be good. They are also recovering from a low base, and that's the reason we like this segment also.
That's quite interesting. Also, when it comes to some of these financials, and I'm talking pure NBFCs here. I know you did address the AMCs, but when it comes to NBFCs, what is your preference like? Because many believe that more than the urban exposure, it is the MFIs which are which have better growth trajectory. Where is it that you stand when it comes to this space?
So in NBFCs, our stance is very clear. We would like to stick to the larger companies or the top five names in the respective segment. So we do have an MFI exposure. The company would be among the top three MFI companies in India. Then we had gold loan NBFCs. We have large corporate NBFCs. So we have 3-4 NBFCs in our portfolio. The criteria is the same, decent valuation, and it should be a known top three player in the segment that it operates into.
Aman, you've been, you guys at Abakkus have been bullish on premiumization of the liquor alcohol space for some time now. It tested your patience but played out very well later on. Some new guys are also coming on the block, basically repairing the balance sheet kind of IPOs. Are you looking at some new, because there is relatively much more eagerness to try out new things, new brands, commodity alcohol becoming premium, all of that kind of plays. Are you widening your beyond the larger ones, the leader?
Yeah, selectively, yes. So as the new IPO comes in based on the merit of the company, we definitely are looking to add more exposure in this segment.
And what about some of the other pharma? You just told Aisha that you are positive on pharma. So pharma, again, some big offerings are coming in. The business model may not be extremely complex, high margin, commanding kind of business model, but the offerings are coming at reasonable valuations. Does it make a case to look at some of these large promoters who are, coming to market, approaching market with, some value conscious approach and leaving value on the table?
Yeah, definitely. And within pharma also, the generic space is now looking better. Exports is now better than what it was, say, 6 months back or 12 months back. So that space is good. Domestic pharma always was a steady player. You have a steady volume as well as value growth here. But for us, it's mainly CDMO companies and export oriented companies within the pharma space that we are getting more bullish on.
Okay, fair enough. What about the outlook then in terms of what you're expecting to be the next trigger? Do you believe that global inflationary concerns perhaps would be one of the big concerns? How is it that you're looking at the markets going into the budget as well as a key event?
Frankly, budget is the next big trigger, and where the budget will lead the market, nobody has a clue, because it could happen that in the last few years, the budget has been a non-event. Whatever the government had to do, they had done ahead of the budget or not waited for the budget to make that announcement. Maybe the same thing can happen this year also, or and hence market might not be disappointed, but at least the trigger which the market is looking for may or may not come in the budget. If it comes, good for all of us. As far as the risk to the market concern, it's predominantly global. So there's elections in UK, there's elections in US this year. I'm told there are like at least 15, 18 large economies which are getting into an election mode this year. Any change in global policy, especially the US or the European markets, will have some impact on global equities, and that is definitely going to have an impact on Indian markets also. Domestically, not much to worry. The only weak pocket in India has been the rural demand or the bottom of the pyramid demand, which has been slow. That too, we are feeling that over the next 3-6 months should be bottoming out.
If you have that view that that end of the demand will bottom out, I don't see any clear plays in your portfolio. Which category would rebound fast in your view?
So we have some exposure in the consumer discretionary space. We don't have direct real estate exposure, but we indirectly played through a laminate company or through a tile company or through some cement names. So the demand there can definitely pick up on the rural housing space. So these are some of the plays that we are working on. Even the alcohol beverage companies that we have in our portfolio, they will also be a beneficiary once the bottom of the pyramid demand starts coming up. And plus we have retail as well as textile exposure in our portfolio. That is also kind of big beneficiary of the rural pickup.
Aman, similarly, while of course your portfolio has a large range and you did highlight many sectors, what's a clear avoid right now?
Clear about companies where there's hype, there's too much of euphoria, and maybe some segments within the defense space where valuations have gone crazy. That's a clear avoid. Some of the consumer names which trade north of 70 ATP, that is also a clear avoid for us. It's basically more to do with companies and valuations than any specific sector or segment per se.
Okay, Aman, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Sure, thank you.
Okay, that's the view coming in from the house of Abakkus, and that was Aman Chowhan's view on the market right now.
If you like this video, then like, share and subscribe to ET Now.